Good morning, everyone, and welcome back to our weekly webinar series. We are overjoyed with the fact that today is our 100th webinar, and we therefore chose to have a free-flowing session today and interact with all our participants today. Over to Anil, sir.
Thank you, Ankit. Namaste to all the viewers, all the audience. It is definitely a very, very special day for us, where we actually are doing 100th webinar in this AAA weekly webinar series. See, we are excited. I believe the audience has supported us a lot, and we were getting regular motivation from all our viewers and audience. And it is only because of that motivation that we've been able to deliver 100 webinars. So the journey has been actually very, very special for us. This not only gave the acceptability, it improved our acceptability in the profession, and also, as we always say, that this is our way of learning. So we started believing that this is the way of learning. So we actually have made it a kind of tagline that this is our way of learning. During this journey, in fact, some special situations came. I was also traveling in a train because, see, you can't miss other engagements. So I did one webinar from a like kind of running train. Also, one webinar while sitting at the airport waiting for the flight. And also, I'm thankful to those friends. They actually put a pause to my running golf game, and I conducted one webinar in the golf course, and the game was paused for 1 hour. We actually have taken up mostly the subjects that we took was insolvency and bankruptcy code and other related matters like SARFAESI. Of course, it also relates to stressed assets. Also, sometimes the RBI forensic audit and how the red flagging of the businesses is done, the transactional audit, the valuation, everything is connected to insolvency and stressed assets. So therefore, we compiled a booklet, and that booklet is a compilation of 100 webinars. And what we did was that for each webinar, we prepared a description and subject, and then a QR code, and all these 100 subjects, descriptions, and QR code is printed in a booklet. It's not a very big, but it is a small booklet. And that booklet, in fact, is being released as part of our celebrations. That booklet is being released tomorrow at 7 p.m. At India Habitat Center. It's a physical event followed by dinner, so it is very difficult to invite all the audience. But however, I actually apologize to the audience that it is not possible to invite all the viewers, all the audience, all our well-wishers. So in this journey of last approximately 2 years and 100 webinars, we have seen that about 20,000 live viewers, 20,000 live viewers and 5,000 unique viewers that we have seen, they have extended their trust on us. Also, we understand that the insolvency is a very, very small community, but of late, we have seen that the interest has actually now, it is increasing amongst the scholars, amongst the students, and amongst the even like professionals. The only trying to apologize that not that everyone can actually join the physical celebrations, but yes, tomorrow at 7 p.m. even this event which is where the chief guest is Justice 𝐝𝐤𝐬𝐝𝐻𝐬, former judge of Supreme Court of India. they would be the chief guest, and also Justice Sikri is presently International Judge of Singapore International Commercial Court. So he has consented to be chief guest, and in his presence, we would be releasing that booklet. So all the viewers, whosoever is interested in that booklet, in case they can just write their name and full address. So we would be sending that booklet to anyone who is interested free of cost. So that I would request everyone to, whosoever needs that booklet, they should actually provide us your address and contact details so that we are able to send it to you by courier. So in this event, which is coming on the celebrations, which is on 10th March, tomorrow evening, 7 o'clock, we also have the honor of Justice M.M. Kumar, founder president of NCLT and former Chief Justice of J&K High Court. He has also consented to become special guests of honor. We are also thankful to Dr. P.S.N. Prasad, the present member of NCLT, and he has given his confirmation, but it is subject to the confirmation, subject to the approval from the president of NCLT. I see, like, again, I will take this opportunity of thanking other dignitaries who have consented to come and grace this occasion, join us the celebration, and to motivate us for further spreading this education and experience. I mean, I would see Justice 𝐝𝐤𝐬𝐬𝐜𝐝, former member, Judicial NCLAT, Shri Vijay Pratap Singh, the former member technical NCLAT, and also member judicial NCLT. Dr. Ashok Kumar Mishra, former member technical NCLAT. Dr. Alok Srivastava, former member technical NCLAT. Shri C.B. Singh, former member technical NCLT. Shri H.C. Suri, former member technical NCLT. Shri Narinder Kumar Bhola, former member technical NCLT. Shri Rajesh Sharma, former member technical NCLT. Shri K.K. Vora, former member technical NCLT. See, we're thankful to the our own regulator. Our first regulator is the IPA of Institute of Chartered Accountants, that is the Indian Institute of Insolvency Professionals of ICAI. So Shri Rahul Madan, the managing director of this IPA of ICAI, has also consented to come. The Shri Adish Agarwal, the senior advocate and president of Supreme Court Bar Association, Shri Vrinder Ganda, senior advocate and president of NCLT and AT Bar Association, Shri U.K. Chaudhary, senior advocate, president of NCLT Bar Association, they have also consented to come. The representation from the bankers' side, those people who deal in stressed assets and avail the services of insolvency professionals, they also would be available, because Delhi is not having many head offices. So we couldn't invite more people from outstations. So in Delhi, we also have the consent of Shri Rakesh Grover, Chief General Manager of Punjab National Bank, looking after the stressed assets targeted resolution action, which they called SASTRA, and also Shri Prabhat Mohan Prasad, General Manager, State Bank of India, the Stressed Asset Management Regional Office North. So Mr. Prasad actually is looking after the entire stressed assets of Northern India. Similarly, Rajneesh Ranjan Roy, the Deputy General Manager of Stressed Asset Management Branch 1. Similarly, Shri Anil Goel, Deputy General Manager of State Bank of India, SAM 2, and many other people who have showered their love and affection, and they are making this event as a kind of motivation for us to work more and more for the profession. I take this opportunity of thanking all of them who have given their consent, and there are many people that I wanted to take names and announce them, but then it is not possible because of the time constraint. So, Ankit, we actually would like all our viewers to at least join us on this particular celebrations through the live YouTube. That will be very, very live, because see the what exactly everyone says. Now, we also have seen like what is today that we are trying to do. Like in this today's uh, 1 hour, we would like to spend at least 30-40 minutes to the questions and answers, and anyone who would like to speak about any case study. So we would like to dedicate this particular webinar on some case studies, life difficulties of our viewers. Also, in the last 10 minutes, we would like to take suggestions from our viewers. Would there be any change in the format in future? Because see, like we have completed 100, and in future, should there be any change in the format? Yes, Ankit, I think it is now like you can handle the entire uh, this thing. Like we need uh, our audience, our viewers to present their live difficulties, case studies, so that we are able to learn collectively and resolve a case. This is what we intend to do today.
So I will of course start with making a request to all the participants that in case you would want to speak, please you can raise your hands, and then we can allow you to kind of speak during the webinar, and and then you can kind of share your suggestion and share what you have to say there. I think I have a Mr. Soni. I'm allowing you to speak. Maybe you can unmute yourself and share your thoughts, sir.
Good morning, sir. Good morning, everyone. Sir, it's a great effort for the professionals that you are making on each Saturday and for continuously for last 95 episodes and more than that. So I have firstly I want to congratulate for the same, because it's a uh, professional knowledge sharing platform and mentorship also. So I have two questions. I am right now handling a voluntary liquidation assignment, and this is about to closure, and final report is to be submitted. So the I have to submit the final audited liquidation account with the final report. Okay. So the question is that whether the existing auditor can sign it. I think no, because the existing auditor cannot be appointed by a this liquidator, being as per the restriction. And if he cannot be appointed, then I would have to engage another chartered accountant or some auditor for giving me the audited liquidation receipt and payment account, so as to attached with the final report. So, how to deal with it? Because whether would require the existing auditor to resign from the auditorship, and I would then engage a separate professional to get me audited financials for the submission of the final report.
So, Mr. Soni, I'm not really very sure that for a voluntary liquidation assignment, you need to change the auditor. It may be for the CIRP, because for a liquidation process under IBC, other than voluntary liquidation, there is no requirement of appointment of an auditor or uh, preparing audited financial statements. That is not required. And
Regulations required. Regulations is there. I have read
why
that, and
the
final report has to be submitted along with the audited receipt and payment account of a
I'm trying to
liquidation.
differentiate between the liquidation process and voluntary liquidation process. So in the liquidation process, there is no requirement of appointing any auditor, and only the auditor that we have to appoint is only to audit the receipt and payment account of the liquidation process. In the voluntary liquidation process, there is a requirement of appointing auditor and to submit a final report along with the audited financial statements. And I don't see any requirement of changing the existing auditor. So there is no requirement of changing the existing auditor. You can continue with the existing auditor if you have faith on the auditors, or if you Otherwise, as per the law, there is no requirement of changing the auditor. So you can continue with the existing auditor.
I have no issue in keeping that auditor because it rather, but I somehow there is a restriction. I cannot engage a professional who has been a past auditor for 5 years. So now the issue now the since the management is in my affair, in my control, so it is the liquidator who has to take the call. So that's why I was asking this question, because because there can be a situation. I, there's an engagement by me. Otherwise, that would not part of the liquidation cost also.
No, the existing auditor can be appointed, and there is no restriction on the voluntary liquidator. There is no such regulation that the existing auditor cannot be appointed. So I think this is what is our very, very firm opinion, that involuntary liquidation, you can appoint and you can continue with the existing auditor. This is our firm opinion, and there is no requirement of changing the auditor just because he has been the auditor of the company. There is no requirement. It is the option of the voluntary liquidator whether to change or not. And in case you want to change it, you can appoint anyone else also. Then in that case, in case you want to change it, then if you appoint any other auditor, that of course would be accepted by the earlier auditor, or you can actually file your forms. Ankit, what are the forms required for appointing an auditor?
ADT 1 is what is required to be filed for appointment of the statutory auditor. And then, of course, this
So
is filed with the
if I
ROC.
yes, that compliances can be made. That is, if I
So I think this is what is our firm opinion, that involuntary liquidation processes, you are not supposed to remove the auditor. It is only the liquidator's wish to appoint the same or to other person. There is no regulation which says that you can't appoint the existing auditor of the company. It is in the case of CIRP, there is a different, it is a section 28 item. So committee of auditors is required to be in that. In the CIRP, in fact, there is a says that the existing auditor should not be appointed. That's a kind of guidelines. But in voluntary liquidation processes, there is no such guidelines. Ankit, we can actually move on.
So next, I can take up the question that has come in on the chat box. Suraj Sharma ji is asking whether RP is required to give the notice of COC to the financial creditors who are related parties.
No, the related party financial creditors are not the members of the committee of creditors. Very clearly, if they are related party, they are not members of the committee of creditors. So therefore, anyone who is not a member or anyone who is not part of the suspended management, like the uh, uh, directors of the company with suspended powers, or the operational creditor who are representing the operational creditors, if it is more than 10%, they are the persons who would actually get the notice and all the documents along with the notice. But anyone who has actually been adjudged as a related party and is a financial creditor or secured financial creditor, they are not supposed to be served with the notices or other documents.
Then we have a question that in a typical situation, the RP could get only one valuation as the control and custody of the assets could not be taken by the RP. In such a situation, can the resolution plan received by RP can be put up before the COC? So,
you have more experience about valuations. You can let this.
So I understand that even if you don't have custody of the asset, and if the valuer would, valuer cannot say that I cannot give you the report. The valuer can put caveats, can put limitations, can say in the report that physical verification was not done by me because of these constraints that were available at the site, or I visited the property from outside, I could not enter the gate. I only could use the satellite image. I only could use the title deed of the property that was made available to me to do the valuation. But in my opinion, no lawyer would normally say, no valuer would normally say that I cannot do the valuation. He should do the valuation after putting in the caveats. This is my understanding. So we have several cases where control and custody was not with the RP, and we have still valued the asset after duly noting down the level of physical verification we could do for that property.
Also, desk valuation is a process. You can also explain desk valuation with the
Desk valuation is a process, but as I said, the problem here that must be coming to Mr. Oberoi must be that the valuer must be saying that because I can't physically verify, I will not value. So there, I think we have a different opinion there that yes, it is requiring a physical verification, but if it is not feasible due to some reasons, just put in a caveat and take it forward rather than blocking the whole process. Because we can't say that physical verification, if that has not happened, then there is no value of the asset. That cannot happen. But physical verification is a mandate under the regulation, so that is something that we should certainly try. Then Mr. MP Jindal is asking that what are the various dates from which limitation starts for 3 years to file the personal insolvency application?
Filing personal insolvency application, I think the trigger, the date of default, first of all, has to be established. The date of default in the personal guarantor is when the personal guarantee is invoked by the lenders, whosoever has the personal guarantee. Once the personal guarantee is invoked, the demand notice is issued. And in the demand notice, there is normally a 30 days time which is given to the debtor, to the personal guarantor. And once that payment is not made, that is the date of default. And from that date of default, all the limitations will work and not before that. So if the date of default, or in any case, because in case we see various sections of the Limitation Act, in that section, even the date of even the limitation period gets renewed or extended on various events, and such events can be admitting a liability in one or the other manners by the debtor, or even the acknowledgement in any kind of letter or acknowledgement in a balance sheet, or like, so all these extensions are also possible under section 17, 18 of the Limitation Act. However, the limitation in the case of personal guarantor will start from the default date, and that default date would be as per the demand notice after the invocation of personal guarantee.
So then I am asking Ravi ji to talk, and maybe Ravi ji, you can unmute yourself and share what you want to say.
Good morning, sir. So first of all, congratulations on the 100th episode. Then I have 3 queries, okay, different topics, but 3 queries. One is voluntary liquidation. What is happening in some of our cases is that the companies have a bank balance of around 1 crore, 2 crores kind of a thing. And they're in a fixed deposit, they're getting interest. And there's a TDS done by the bank. But since no other claim is there, I'm supposed to close within 90 days. But what happens in this interest is that there's a TDS. I have to file an income tax return only when the utility is coming in the next year. That means, suppose it is in April 1st, I got the assignment. June, I had to complete. But June 24, I have to complete. But the TDS utility, income tax utility, will come only in June 25. So till that time, I'm not able to do anything because I'm not able to file the return. Item number 1. Second query is that I have read some judgments in case of a liquidation sale. When the liquidator sells the asset, there's a stamp duty requirement when I'm selling a land and all that. I read one judgment of Kerala High Court or something which says that, okay, in that case, the person has went up to High Court and got a saying that this is like a bank sale something. So they got an exemption. But when I tried with our sub-registrar, they said that go to High Court again. But my clients are not able to go to High Court because there's a long-term process. And another thing is to pay within 90 days here. And after paying, he can't wait for registration because he has to create a charge on some other bank. So that is second question. And third question I have is like a AR. I am authorized representative in one case. So the minutes of the meeting contain the sensitive information like valuation, not valuation, at least the resolution plan value of each of the clients, each of the RAs rather. Okay, but if I circulate to my 100, 200 financial creditors who are the LRTs or any other class of creditors, how do I maintain the secrecy of that number? Because in the meeting, COC meeting, we didn't tell each one RA's number to another RA. But if I circulate to another 100, 200 unknown people, how do we maintain the secrecy? So 3 questions, sir.
So I think let us take the first one. First one was regarding the
TDS on voluntary liquidation, income during voluntary liquidation.
So what I understand faintly, I remember that in the Income Tax Act there is a provision, and that provision also can be invoked by saying that this company is under liquidation, and a return can be filed even much before the closure of the financial year, and the refund can be claimed. The exact regulation, the exact provision, Ankit will share with you.
No, sir, but the problem is that there is no manual returns nowadays. Unless the utility comes, we have to file online. No? So that was the issue.
So online return filing is very much possible, and we have, in several cases, what we've done is we have taken control of the CD's login ID and password through making an application for acting as an authorized representative for another company. So if you log into your own income tax portal, your individual income tax portal, go to that part of the portal where you can apply to be the authorized representative of the CD or the company under liquidation. What the income tax department does is that it gives you full access to the complete income tax portal of that company, allowing you to file returns through that portal. And we have done that ourselves in many cases. So the electronic system is available to do this, number one. Number two, the return that is fileable can be filed, a receipt and payment is required. So because if you tick when you're filing the returns that the company is under liquidation, then income tax department allows you to claim that refund for TDS deducted, and also allows you to bypass all the requirements for P&L submission, balance sheet submission, and only goes ahead with the receipt and payment submission.
Okay. And this is also valid under the voluntary liquidation, Ankit?
This will be valid across all CIRP, liquidation, voluntary liquidation, across all processes it is available.
Okay. So the second is I will also take up this stamp duty exemption. So we have a lot of experience of selling the assets under SARFAESI. In fact, the last 20 years we must have sold, because on an average 30 assets in a month. So you can understand our experience of almost like kind of 300 in a year, and then maybe 6,000 assets that we have already sold under SARFAESI, and the sales certificate is issued under SARFAESI, and the stamp duty is in any case payable. However, this judgment, one or two judgments that I have also seen where it is pleaded by the buyer that I have a sales certificate which is duly given by the liquidator appointed by the NCLT. So therefore, there is no stamp duty should be applicable on this. So, but the registrars are not accepting that, and there is no other way. There is no other way. So, Ankit, we have to we have to say that it is the only option is to pay the stamp duty if it is not a very large amount. But if it is a large amount, then going to High Court is the only way out. Because see, changing the policy of the state and getting that policy communicated to all the sub-registrars, that would be difficult rather than going to High Court and getting it done. And to my understanding, this judgment is not in line with the Registration Act. Registration Act is very clear that even if you can even register the sales certificate, stamp duty is payable. So why the stamp duty should not be payable on the sale by the liquidator? Because I think somebody has just compared it with a court order. When the High Court passes an order that this property is now from onwards is owned by, or it is that kind of order, I think, has been pleaded by someone. My own understanding is that the stamp duty should be payable. And the third question was, Ankit?
Third question is that AR circulating the minutes to how to protect the sensitive information. Because
I think when it is a case of home buyers, and each and every home buyer is member of your committee of creditors, and the committee of creditors definitely has a right to get all the resolution plans, and they have to along with the due diligence by the RP or the RP's team, RFRP due diligence and the legal due diligence. That is their right. And as far as this law is concerned, there is no confidentiality undertaking that we need to take from the members of the committee of creditors, because see, they have been given these powers, because see, they need to understand the commercial viability, feasibility, everything they have to see. So they have to go through the resolution plans in depth. So there is no requirement of confidentiality in this case. Why the RP would like to maintain the confidentiality when the law doesn't provide the committee of creditors to provide an undertaking? So RP has to work according to the law, according to regulations. So the resolution plan will be forwarded to them, and they will only vote the resolution plan in case they see the resolution plan in detail. So there is no requirement of taking a confidential undertaking, and the RP should not also try to maintain the confidentiality as far as the resolution plans are concerned from the committee of creditors. The confidentiality is required only vis-a-vis the resolution applicants, but not the committee of creditors. Because if the committee of creditors share some information for the benefit or for some loss of other people, so ultimately the loss is for the committee of creditors, because they are entitled to what is being offered in the resolution plan. So this is
So
what
the problem is that in a committee of creditors where we have 5 or 6 or 10 banks and 30 banks also, we can tell them because they're all one side. Now, if I am my authorized representative and I have 200, 300 unknown people who I don't know where all they are, all, or some of them are employees of, okay, we don't know all that. No, so how do we? That is the problem. Among the class of creditors.
That is not the duty of the RP to maintain the confidentiality with the COC members. Once the law has accepted them as members of the COC, RP is supposed to share the information with them. And why the RP should be bothered about the confidentiality when it is not required under the law? What is the hurdle that you are facing? In case, let us try to understand that normally what we do, we also kind of do meetings of the PRAs. And in those meetings, we tell them that this is what is the highest offer so far. So you need to improve this. So I don't think this is required as a confidentiality item between the RP and the COC members. And there is no reason that the RP should be proactive in maintaining the confidentiality.
So same thing applies to authorized representative also. Authorized representative role is only to pass on from whatever RP gives to
absolutely.
class of creditors.
RP or the AR is the same thing, because the AR is doing the duty, whatever the RP is telling for the voting and briefing to basically the AR is a communication channel.
So postman.
Okay, communication channel. I am not saying postman. I'm saying communication channel. Of course, of late, in case you see the responsibilities of the AR pretty increased, and now the AR is also having kind of a guidance role to the home buyers, to the class of creditors. So that role has increased, but even after that, it is basically to improve the communication between the RP and the class of creditors.
Thank you, sir.
I'm now asking Pankaj Tibrewal ji to unmute and share what he wants to say.
Is it possible, Ankit, to also show the video?
That will be requiring the
I
panelist.
think you can upgrade the person as a panelist, so that we are also, in case he is interested to come on the screen.
Good morning.
Good morning, Pankaj. So it is my pleasure to introduce Pankaj Tibrewal is a partner of AAA Insolvency, and he's Kolkata based. Yes, Pankaj, please continue.
So first of all, congratulations, sir, on attaining this milestone, and also would expect the same kind of sharing and learning together will continue in future.
Yes,
which gives us an kind of learning, we would say, which we miss generally
otherwise in day-to-day life many a times, and on with the kind of questions being raised and understanding being shared. It's an immense learning opportunity for all of us, and thank you for that. And would also like to understand, so with respect to the fact, we understand that for CIRP cost, we generally get it ratified in the COC meetings. So, and to my understanding, there is no provision in law for the mandatory voting for that.
No, there is no such specific law, because see, when we see section 28 items, there are specific items which is section 28, and this particular item of approval of the CIRP cost is not amongst the section 28 items, and it is also nowhere provided in any regulations that the approval of the CIRP cost or any fee payable to professionals requires 66% voting share. So this is an item where more than 50% voting is enough for the approval. Now, the approval can be individual, like when we say appointment of professionals, that can be individual along with the fee. Approval, appointment, the approval of the fee of the valuer, approval of the fee of the lawyer and other professionals appointed, that's a separate issue. And I believe when we actually get approval of a fee to a professional, maybe a forensic auditor, maybe a valuer, and then I recommend that it should be voted upon. However, overall, every meeting should have a detailed item-wise CIRP cost, and that should be, along with the each minute, it should be attached. And then it should be a kind of decision, a paragraph, that the decision taken during the meetings, and that should be mentioned as decision number 1, decision number 2, and that cannot be resolution also, because everything is not a resolution. Decision can be also without any. And then it can be said that it is ratified. And in some cases we have seen, and we have done also, that first the draft minutes are circulated or final minutes are circulated, and it is mentioned in the minutes that in case we do not receive any observation within 24 hours or within 48 hours, then this minutes will be considered as final. In the next meeting, there should be an agenda where the minutes of the last meeting should be again considered as read and adopted. So in this manner, one, that a decision can be mentioned in the minutes that the CIRP cost was approved or ratified. Then in the subsequent minutes, we can say that the minutes of the last meeting were adopted, since no observation was received. That is the kind of fortification of the decisions taken or the ratification of the COC on the CIRP cost.
Yeah. And the second query I have is that the new amendment in regulation with respect to frequency of COC meeting for CIRP, or for that matter liquidation also, wherein it says every RP has to call for the meeting every 30 days unless COC decides to have held this in every quarter. So every quarter here mean thereby, because it says not the days, it says for the quarter, which means can it be considered, let's say, for every quarter, it can be at the gap of 5 months within the 2 quarters?
Yes, I think whenever, see, first of all, this after this 15th or 12th of February,
15th February amendment.
15th also and 12th also, because 12th was the CIRP regulation and 15th was the liquidation regulations.
Yeah.
And in those and both these regulations, there is a requirement of having meeting with the gap between the two meetings would not exceed 30 days. So the first meeting after the regulation should be within 30 days of the release of the regulations. And in that meeting, the committee or the stakeholders will decide whether the meetings would happen once in a quarter or it would have on any frequency like 2 months or 1.5 months or 1 month. So whatever the decision would be. However, whenever the word quarter is written in any regulation, it actually would mean calendar quarter. So the one meeting in one calendar quarter can also say that the gap between the two meetings can be even more than 5 months if there are 2 calendar quarters, and in each calendar quarter there is 1 meeting. That is possible. Yes, Ankit, you have any different opinion on this?
I'm just looking at the regulation here.
So
I'm just taking it out again.
Ankitji, it is mentioned for otherwise it's mentioned in days, which is 30 days. But for let's say if COC decides otherwise, then it should happen every quarter. That's what it is written in the
So
regulation.
one meeting in each quarter would certainly mean the
Sufficient.
same thing, that it
Yeah.
is April to June. April to June, there has to be one meeting, and then July to, I think this is what is required here. One meeting in each quarter cannot mean that you have meeting which is, 3 months apart. And I
Right.
think that's how I think Companies Act also has these similar provisions. And then they had, I think, amended that further to say that it can be one in each quarter, and the time between two meetings should not be more than this days. So I think that subsequent amendment was done because many people used to do that they used to want to keep a meeting on 30th June and 1st July, so that they're completing the compliance of having two meetings in one meeting in every quarter.
Yeah.
So,
And had
so
the intention of law would have been there that it should not be more than 90 days, then they would have mentioned the days particularly, the way
no,
they have mentioned 30 days.
I believe the maybe the thought process was that okay, once in 3 months there should be a meeting, but once in each at least one meeting in each quarter will have a different meaning. That
Yeah.
one can genuinely have a meeting on 30th June and 1st July and still complete the compliance.
Correct. Thank you.
I think when the power has been given to these committee members or the stakeholders and the committee members can decide any other way. In case there is no decision by the committee of creditors or stakeholders, then the gap between two meetings cannot be more than 30 days. But when the committee is taking a decision, the committee can also say that the gap between two meetings cannot exceed 3 months, or it also can be. So I think once the
or 2 months, it is not required that it has to be either of these two. The committee can say that okay, we are extending this 30 days to 60 days.
So I believe what the intent is that let it be regulated by the committee or the stakeholders, and the RP would be bound by whatever is resolution passed by them. So no stakeholders will say that you can manipulate this by saying 30th June and 1st July and doing away with 6 months time. So that is not something that will be approved by the stakeholders or the members of the committee. So I think what we are understanding as of now is that this is once in a calendar quarter, but the powers are with the members of the stakeholders consultation committee or the committee of creditors. Whatever way they will decide, that will be accepted. But that should be acceptable by the RP.
Thank you, sir. Thank you.
Then I have Mr. The email ID is SKA9001. I can please ask you to unmute yourself and share what you want to say, sir or ma'am. SKA9001. And I'm also asking Mr. Trivedi, MH Trivedi, to unmute and share his question.
Good morning, all, sir. Thank you for the session. My question is, apart from CIRP, RV is also required for under Companies Act under various contingencies. But these assignments are coming very far and few. Absolutely no assignments. There are only some 500 plant and machinery valuers. And I have also come to know that the chartered accountants or the account section is not aware of this rules of using RV. So how this violation will be come to the notice of the authorities?
Ankit, this is your subject. It is regarding valuation, and what Mr. Trivedi is saying that there are a lot of provisions in the Companies Act where the valuation is required.
So, Mr. Trivedi, wherever valuation is required under Companies Act, normally what we see is that the forms that are required to be filed as part of any process requires the valuation certificates to be attached. So, for example, if there is a fresh issue of shares, then that is a valuation certificate will be required by the MCA as part of that form which is submitted. Similarly, if there is a non-cash consideration, let's say in some cases, there again the valuation certificate will be required by the forms. So most of the requirements under Companies Act are captured through or are implemented through these forms to be filed. So therefore, I am of the impression that most of the companies would understand, or the professionals know that yes, for this process, valuation is required by the company. However, the struggle is always to reach out and inform these companies, or rather bring to the knowledge of these companies and these professionals that yes, somebody like you is available as a professional to render their services to them. And therefore the idea is to keep sharing, maybe, and bring it to their knowledge that yes, your services are available to them, because we understand that many professionals and many companies would seek a reference from somebody they know, who can tell them about an RV who can get this job done for them, or to get this compliance done from them. So I hope I was able to answer your question, sir.
Yes, thank you, sir.
I'm now asking Bishwanath Chaudhary ji to unmute himself and share. Yes, Bishwanath ji. You're not audible, sir. I think there's something wrong with your audio. Maybe you can try again. In the meantime, I can try and take up some questions from from our Q&A box. So we are. I will take up. So who would be this is a question which comes in from YP Singh and Associates, YP Single Associates. Who would be the principal borrower after approval of resolution plan by NCLT, to whom the copy of application filed under section 34 can be, this just disappeared from my screen, so sorry. All right, that question just disappeared, my bad. In the meantime, I will just try and get it back.
So I can read one question, which is a project was, it is anonymous attendee. A project was underway when the CIRP was also initiated. The CD now in liquidation. The contractor who was executing the project has submitted his claim as OC. Apart from their contractor's claim, they also claim lien over the assets supplied to the CT, stating that they are unpaid seller and claim ownership on the assets supplied. Now, this is a very important question because, see, I think the Section 46 of the Sales of Goods Act is being invoked by the contractor. Now, what exactly Section 46 of the Sales of Goods Act says, that in case the delivery from the seller has started the delivery and the possession has not been handed over to the buyer, then in that case the lien is available with the seller, unpaid seller. Now, in various circumstances that we see that the invoice is issued by the seller, the invoice is also received by the buyer, and the goods are delivered at the location of the project, and the project is then underway. It is maybe it's a construction project, it is a engineering, procurement and commissioning kind of a EPC kind of a project, and the invoice is given in the name of the company along with the GST. The invoice is accepted by the company in their books of account, and the GST claims are input tax creditors are taken. And even after that, those invoices are given to the banks for releasing the term loans. So after this, it will be very difficult to say. After this, it will be very difficult to say that there was a lien under Section 46 of the Sales of Goods Act. I think you can still see a judgment in the case of Visa Steel Limited by NCLAT. That judgment will help you. However, in case the possession is not handed over, my belief is that if the possession is not handed over and the invoice is not booked by the corporate debtor, if the invoice is not taken for the purpose of any term loan, then the contractor may get success. Because see, the most critical part is that uh, the material was not handed over to the uh, to the to the buyer. That is the most critical part. I hope I am able to answer this. And the another question that I can take up is from YP Singh and Associates. The question is, as per the judgment of Honorable Supreme Court in the case of Sundaresh Bhatt versus CBIC, the Custom Department has to release the custom goods lying in the custom bonded warehouses without payment of custom duty and other levies. Please clarify the details of other levies. It will include GST and custom bonded warehouse rent also or not. Now, this is a scenario where the custom duty is the past dues, and if there is any custom duty, that will be submitted as a claim. And during CIRP or during the liquidation process, the claims are supposed to be received as on the commencement of CIRP or as on the commencement of liquidation. If there is any amount, which is payable during CIRP, which is incurred during CIRP, or which is incurred during liquidation process, that has a separate treatment, or any amount which is incurred prior to that initiation of CIRP or liquidation, that has a separate treatment. So both these claims will be treated separately. We are saying one, the GST and the custom duty both are prior to the CIRP date or prior to the liquidation date, and they both will have the similar treatment, because the GST law also very clearly say that the GST doesn't override IBC. GST, IBC overrides GST. Means as far as the payment of GST is concerned, the IBC overrides GST whenever there is a clash of provisions. However, the custom bonded warehouse charges, as far as these charges are concerned, the claim is divided into two periods. One is before the commencement of liquidation process or the CIRP, and one is the during the process. My understanding is that during the liquidation process, if there is any kind of expenditure incurred, that has to be paid in full, because that is the liquidation cost. And for even due a CIRP period also, in case there is any expenditure incurred, because see this, but you can't say that the services of this particular warehouse was not used. The goods were lying there, the space was being occupied, and it was the services of this warehouse was taken. So therefore, the dues of CIRP period or the liquidation period would be payable, and other dues will actually come as a claim, and those would be decided as per Section 53. Yes, Ankit.
Then we have a question coming in from Mr. Vipul Dubey. He's saying that there was a change in regulation in liquidation where the adjudicating authority can appoint liquidator suo motu, and they have to remove the ongoing RP. So I think this instruction had come in from IBBI and had gone to NCLT, that using their powers, they would want the existing RP to be disqualified to be appointed as a liquidator in the same case. So this is something which is an ongoing battle, because where the CUC is choosing the same RP to be appointed as a liquidator, there have been a few cases where the court has taken a decision to appoint a liquidator from the board or from the list of empaneled IPs with the NCLT. So this is ongoing. I believe you can also share some update in case you have any with respect to what is the development on this front. Then we talk about in a PG to CD case under Section 95, once RP is appointed under Section 100, there is no cooperation from the debtor PG. Then how can we prepare financial statement of affairs of PG, and how about repayment plan in the absence of the cooperation? So here we understand that the idea would be to, of course, bring it on record to the adjudicating authority that yes, this is what is the cooperation level of the personal guarantor, and also using public information, using information which might be available with the creditors. One can always prepare financial statement to the extent of information which is available, So in case there are no details of assets available as provided by the personal guarantor, then one will have to trust the creditors and the sources which are other information sources which are available with the RP. What is your comment on this?
Ankit, I would add what you are saying. One, that you have already explained how after the appointment of the auditor, after the appointment of the RP will have the power to uh, take the control on the income tax portal of the debtor. So income tax portal will give us the details of the last 3 years income tax returns. As far as these liabilities are concerned, those liabilities will be seen in the claims or if there is any cooperation from the debtor. But if there is no cooperation, then I think the meeting of the creditors will actually be very helpful, and the creditors will approve a kind of cost for asset tracing, because there are companies nowadays, they actually claim that they can trace the assets of individuals also based on their PAN number across India. And that kind of asset tracing, if it is done, then a statement of affair can be prepared. And then the statement of affair need to be presented along with the repayment plan. And in case no repayment plan is submitted by the debtor, then of course the one meeting would be required, meeting of creditors, and that matter can be closed. Everything like the kind of taking control, custody, everything will come under the bankruptcy process, not in the insolvency resolution process of PG. So the RP appointed as in the process of insolvency resolution process is something which is not having many duties except to prepare a statement of affair. And the statement of affair, the items required in the statement of affairs, all is possible other than the assets. So the assets, we can say that the asset tracing can be done after the approval of the cost by the creditors. Yes, Ankit.
All right. So then we have a question from Vishwanath Ji. He's asking that in a voluntary liquidation, there are two shareholders and there are two flats in the company. The shareholders want to retain one flat each instead of selling them to outsiders. The transfer would happen at fair value, whether this argument is okay. We understand that this is a feasible option, that
Yes,
one
this is a
can, this is a
distribution of
feasible
assets.
option. Distribution of assets
Assets
without realizing them is a feasible option.
Yes. However, whatever income tax is levied on such transfer, that would be levied because there is no exemption of income tax during voluntary liquidations.
Income tax department in this case, kind of what it does is, I believe, what I understand is that the circle rate of the property or the stamp duty value of the guideline value of the property is what will be considered to be transferred to the shareholders. And in case the transfer or this amount is more than their shareholding in the company and involves reserves and surplus, then there'll be a deemed dividend tax on the dividend payout. This is what I understand.
And also a
So
kind of capital gain in case my cost of shares is say 2,000 and I'm getting something like 10,000 after my indexed valuation, indexed cost, I will be able to pay something like which is the capital gain tax on the, in case I am getting a property, as you rightly said, the valuation of the property would be as per the circle rates.
right. Then we have a question from Mr. Ranjan. In case of instead of personal insolvency, where the guarantee is secured on asset of the PG. So guarantee is not secured. The security can only be created through a hypothecation deed or a separate document. Simply because somebody has given a personal guarantee would not mean that there is a security on the assets of the PG, on individual assets of the PG. So therefore, we say that in case you're not able to trace the asset, the PG might just sell it and kind of realize very little value out of the asset. Therefore, catching that asset which is not mortgaged with any bank is the key. Also, there might be an asset which is mortgaged, but which is where the loan amount is very less as compared to the value of the property. So such incidences can be there.
Yes.
So I think we are through with 1 hour. We have many questions which are yet to be taken up. But I will, of course, request the participants to maybe take them offline And then, of course, we will be happy to answer those. I've already
I
noted
think
down.
I would also like to say, Ankit, sorry, I would also like to say that in case I need some suggestions on the chat box, like what kind of format they would expect after this 100 webinars. Like the options are that whether we should have some kind of officials in our webinar, or you need some kind of experts in our webinars, or you need, like, we first deliver our part and then in the last 15 minutes we seek comments from the from some experts. So these kind of suggestions I need. Also, because that we need some changes to be made in the format. So I would
Rajesh Shrethi ji wants to share, I believe, something here. I've asked him to unmute.
Yeah, thank you, Ankit, and thank you, Anil, sir. First of all, congratulations to both of you and your team for this excellent rendering of 100 episodes. I have been attending most of the episode, barring few.
So we have worked with you. We started our career with you, sir. If you
Sir,
recall,
that apart,
if you recall at Mumbai, sir.
Sir, right now you stand on your own, and you have been guiding force for many insolvency professionals.
Yes,
so I am very happy to attend your all your sessions. And only one suggestion, one small suggestion: the contents way you are presenting is excellent. There is no change required in your format. But I would like to say that you can take up CIR, means a case study of either means various types of cases like CRP or pre-pack or even PG to CD or even voluntary liquidation or liquidation. Means these are the type of cases normally we see, and particularly CIRP cases, they are well publicized. But personal insolvency cases, there are a lot of questions and doubts. So that you can take in the beginning. Means I don't think any case is completed so far, but lot of procedural hurdles. Like in today's webinar also, you have seen many questions on personal insolvency. So that is one suggestion. And second suggestion is that if you can ensure the CPE hours with the association with the IPA, then it will be greatly benefiting insolvency professionals or valuers or similar kind people. So these are the two suggestions.
So we will try for the CPRs, and the other suggestion is very important for us, because we also see that presently the kind of work which is in the market with the IPs is regarding the personal insolvency, personal guarantors cases, and also the avoidance transactions are getting listed regularly now. So most of the lawyers and IPs are struggling to argue. So we actually have done that part. And now in the coming weeks, we would also be focusing on separate individual issues under personal guarantors cases. Thank you. Thank you, Rajesh.
Thank you, sir. Thank you, Ankit.
Thank you, sir. Thank you. Ravi ji also wants to add something, perhaps.
Sir, one small addition in that list of items, what he said, please discuss the disciplinary cases, because last week we saw one very prominent person against disciplinary case. So I don't want to name him, but it looks very odd for us. And I read through the disciplinary judgment, but I didn't find any mistake in that sense. Okay, which most of us do. That's what he has also done. But where is the mistake in that? Sometimes I'm not able to. Okay, certain things are blatant violations, we can understand. But certain judgments, certain disciplinary case judgments, no, we are not able to comprehend, because most of us are doing that way only. Okay, but so my request is that please take up any prominent disciplinary cases that come up.
So we can have a topic on maybe learnings from disciplinary orders, something like that can be done. We can review the recent disciplinary orders for valuation and IPs, and then kind of see that what the regulation says and what is the expectation of IBBI with respect to those matters. We can do that.
That's true. Thank you.
Rachna ji, please unmute yourself, ma'am.
Yeah, good afternoon, sir. Your sessions are very informative, and I thank you for that. I have a question. Like recently, IBBI has come up with a circular that valuers are to be called in a COC meeting to share the on what basis the valuations are being done and all. So, in case our appointment was made long back, say 2-3 months back, and the valuation is in process, so in that case also we should call the valuers in the meeting.
So I am of the view here that valuation methodology, which is required to be presented before the COC, wherever the valuation report is pending as on the date of this amendment of the regulation,
Okay.
we should arrange that meeting. And we have already done a few meetings ourselves as valuers with the COC members. So what we have
Okay.
done is we have only presented that yes, this is the information that has come to us. This is the progress in the valuation process. This was the date of our visit, etc., etc. This is the pending information, in absence of which we are taking these assumptions, and then we share our methodology with respect to each and every asset, whether it is land and building, plant and machinery, or SFA. So this we have already done 3 times in the last 2 weeks. So
Okay.
we understand that that is the expectation of the COC. We understand that there is no requirement for us to discuss the values in that meeting. It is only supposed to be the valuation methodology.
Okay. Okay. Thank you so much, Ankit. Thank you.
Thank you, Rachna. Thank you. So I think we can conclude. The time is always short, but then we actually have to be again slaves of the time. So thank you very much. And as we say that we are celebrating, and in case you can just in the chat box, in case you can write your address, I would be sending you the.
I've already noted down all the addresses that came in, and I've already sent them to our internal group for sending the brochure, sending the booklets.
Anyone otherwise also you can send me WhatsApp whenever anyone is interested in taking that booklet. I will be sending you the booklet through the courier. So thank you very much for being with us in this 100 webinar journey. And as we always say, that this is our way of learning. We conclude.
Thank you, everyone. Thank you so much.